All right, next question comes from Dustin. I see a lot of public Motley Fool articles pop up around the internet on my newsfeed. Some of those articles are bearish on stocks that are current and even recent stock advisor recommendations. I trust Tom and David's pick, and I know they are in it for the long game, so maybe the discrepancy is on short-term versus long-term. I was hoping you could comment on the somewhat mixed messages I'm getting from time to time from the Motley Fool.
Yeah, well, we get this question a lot.
Yeah.
We do, our members,
Sure.
right? This happens all the time. I'd say we don't have a company line on any stock at the Motley Fool. So we're a motley group. We have lots of smart people writing for us. We all have divergent views and experiences and insights to bring to those stocks. And we think that we're ultimately smarter because of those. So I'd say when you read somebody else's, and this goes for people outside of the Fool as well, often we'll get some questions from people when a short report comes out about a particular company that the Motley Fool really likes. And they say, man, this report came out, it's 100 pages long, and they say how much they hate this particular company. And my answer is, they could be right and we could be right. You mentioned duration there, or time frame. We're long-term thinkers and investors here. So when we make a pick, we're looking out 3 to 5 years at least, and hopefully a lot longer with that pick. Where people that have a negative view, particularly if they're short the stock, that's usually a very short time horizon. And they put out these reports because they have to have action on the stock, otherwise they have to buy another short. That costs more money. So we could both be right, but I would just say, like, we're pretty good. Tom and Dave have a good track record, but understand the argument. We don't have a company line on any particular stock, and we would encourage you to read negative things about your company so you have a better perspective, right?
Yeah, I stumbled upon one of these examples today. I was trying to see on Fool IQ, which is where we kind of aggregate all of our analyst thoughts. Like, I needed someone to talk about Tesla with a reporter, and so I go to Fool IQ, and it said negative conviction for Tesla, but it's recommended in 8 of our services.
Yeah.
Yes.
And I'm like, yeah, that's a mixed message. I can completely understand why our members are confused.
Yep. And it happens.
I'm confused.
Yeah.
Like, I don't know.
Yeah. It happens. Tesla is a perfect example of a company like that because the optionality for this business is so wide. You know, I mean, that's Elon Musk, which there's a lot of things around Elon Musk, and he makes headlines every day, some good, some bad. But he's ridiculously smart and accomplished a lot. And then as far as the business, there's some debt. You know, they hold about $10 billion in debt on their balance sheet, and there's some questions about that. And then they're launching into new countries and developing new models and self-driving and all this kind of stuff. So there's one of these businesses where just a lot of questions around them, but also a lot of opportunity. So that means there's going to be a lot of divergent viewpoints on that business. And there are within the company and outside of it.